There's one thing about Bitcoin that has had me worried for some time. Mining is overwhelmingly centralized in China. Now, this has been a well-known yet peripheral risk for a couple of years now. However, given the recent geopolitical tensions in the world, the risk has come to a head. So, is this something we should really be worried about? My name is Guy, and this is exactly what I'm going to explore in this video. I'll also take a deep dive into the current miner ecosystem and give you my personal take on what it means for Bitcoin. So, be sure to watch till the end. A few quick disclaimers, chaps. I am a YouTuber, not a financial advisor. So what I say is pretty clearly not financial advice. Please always do your own research. And if you're new here, a fine day to you. I take a look at the Bitcoin markets regularly, so if you would like to be kept in the loop, be sure to hit up that subscribe button. Oh, and turn on notifications so that you're plugged into the crypto matrix. Finally, I've provided timestamps below if you want to jump around, and feel free to adjust playback speed to your preference. Okay, that's it. Let's get this thing going. Now, the first and most important question that most people will no doubt ask is, why is proof-of-work miner centralization bad? Well, because of what miners can do when they have that control. They can attack the network by double spending. So ominous is the threat of this attack that it is often colloquially called a 51% attack. It's the scenario where a miner or group of miners is able to garner more than 50% of the network hash rate and double spend transactions. They can basically alter the state of the blockchain and reverse particular transactions that took place while they were under control of the network. Now, although a 51% attack does not produce new coins or directly cause a collapse of a blockchain, there are several impacts on confidence that participants will have in the cryptocurrency. If someone knows that a malicious miner is able to alter the state of the blockchain, then it creates a crisis of confidence. Other miners to the network will either have to cease mining or take the risk that they are confirming the invalid chain. Users will also panic about the chance of their transactions not getting confirmed and worry about the prospect of a particular transaction being reversed by the malicious miner or miners. This could have severe impacts for trust going forward, as the potential threat may raise its head any time in the future. And 51% attacks are not just an abstract construct. They've been used before to attack more vulnerable blockchains. For example, you've had attacks on Bitcoin Gold, Ethereum Classic, and Zencash, now Horizon. In the case of Bitcoin Gold, it's actually been hit on more than one occasion. The first of these was back in 2018, where the miners were able to double spend $17 million. Then again in January of this year, but only for $70,000. Oh, the main attack vector of these double spend attacks is through exchanges, by the way. They basically double spend a transaction onto an exchange and then quickly withdraw funds in another crypto. This prompted Bittrex to delist Bitcoin Gold given the losses they suffered. Anyways, I think it's pretty clear that 51% attacks are dangerous to a blockchain. However, the risk in the case of Bitcoin has always been discounted. People pointed to a number of factors. The first of these is the eye-watering cost to conduct a Bitcoin 51% attack. For example, using this handy site, it can be calculated that to run a 51% attack on the Bitcoin network for only 1 hour would cost over $400,000. By contrast, the cost to run one on Ethereum Classic is $6,500 and a mere $312 on Bitcoin Gold. Even then, they point to the impracticality of marshalling such an attack. It could be very hard to rent that Bitcoin hash rate which is required. So, in order to get to over 51% of the network hash, miners and mining pools with more than 50% hash rate would have to coordinate any sort of an attack. These mining farms are run by a collection of different companies. How could they realistically coordinate this sort of attack amongst themselves? Moreover, why would these private companies attack a network that they have a direct stake in? So what most people in the Bitcoin markets have been banking on for the past few years is some sort of mutually assured destruction. If the mining farms got together and decided to attack the network, they would also be taking a poison pill for their future livelihoods. Now, while that may be true in a country where the public and the private sector are clearly separated, It's quite different in those where they are often carefully intertwined. So, how much mining is really concentrated in China? And how has this changed over the years? Well, one resource that I encourage you to take a look at is this mining map visualization. It was developed by researchers out of Cambridge and shows the total amount of hash rate for different countries in the world. This has also been tracking the distribution since Q3 of 2019, so you can get a fuller picture over the past few months. Taking a look at the data for April, you can see over 65% of the mining hash rate is emanating from China. Despite how large this may seem, it's actually below the rate that we had earlier in the year when it was above 72%. The only country that even comes close to that is the United States, and that has just above 7% of the global hash rate. It really is stark. And it's not just that it's concentrated in China. It's also pretty centralized within China itself. According to a report last year by CoinShares, Sichuan province accounted for 54% of the global hash rate. Now, let that sink in. Mining farms in just a single province in China could effectively control the Bitcoin network. Okay, so that's no doubt troubling, but how likely is such a scenario to happen? Well, I think it's no secret that things operate differently in China than they do in most democracies. Property rights are rather nebulous concepts. Between local and central governments, companies often have very little certainty when it comes to regulatory guidelines. Is it conceivable that the Chinese government could seize all mining equipment from Chinese companies and use it to conduct a 51% attack? Could they bend all miners in China to their will in order to take over the network? Well, of course they could. They control the country and hence they make the rules. But whether they would do something like that is another question entirely. One would have to ask what they would gain from doing it. Well, not really that much, to be honest. Firstly, I highly doubt that they'll be able to make any money from doing it. Even if they were able to double spend millions in Bitcoin, how are they going to liquidate it? How are they going to convert it into fiat? And who is going to buy it from them and when? Moreover, the Bitcoin network is one of the most observed in the world. The moment that any sort of attack starts to take place, news of it will spread in a second. The price will collapse within minutes. The coins that the government was able to grab will be worth nearly nothing before it can even move wallets. You see, it's a lot easier to conduct a double spend attack on a project like Bitcoin Gold. The market cap is 1/100th that of Bitcoin. No one will really notice anything irregular because, and sorry to be frank here, they don't really care. Okay, so the Chinese government won't make any money from attacking Bitcoin. But what about if they wanted it for leverage? What about if they wanted it as a bargaining tool, as a way to bamboozle Western governments in an age of intense security? This is not an entirely outrageous assertion. I mean, you just have to look at a few recent examples of how China has reacted to perceived slights. For example, last year, the Canadian authorities arrested the CFO of Huawei on an extradition request from the United States. Long story short, China didn't like this move one bit. Not only did they immediately arrest 2 Canadian diplomats, but they also banned all canola oil imports from Canada. Yep. They ceased billions of dollars in trade of a commodity that is used extensively in China because of one arrest. Or let's take a look at a more recent example. You have the case of the Australian Prime Minister requesting for a global investigation into the origins of the coronavirus. Not a particularly unreasonable request. The Chinese response? Well, they labelled Australia as, quote, chewing gum stuck on the sole of our shoes. Oh yes, and they also placed an 80% tariff on imports of Australian barley, another billion-dollar industry. A mild overreaction, should we say? Now, there are plenty of other examples of the Chinese government lashing out at perceived slights. These have even ventured into the armed conflict realm with their Indian border disputes and their operations in the South China Sea. Okay, I know what you're thinking. Guy, I'm tired of geopolitics. Why are you telling me this? Well, it's important to understand the motivations behind the Chinese government in order to determine whether it's at all possible that they set their sights on Bitcoin. Now, I don't happen to think that this is a route that the Chinese government will take. There are far more important targets to go after and industries to sanction. I also somehow think that governments like the United States won't give a flying fig about whether China wants to attack Bitcoin. In fact, given Trump's views on cryptocurrency, it may be a blessing for him. So, from that perspective, it doesn't really make sense for them to use this as a bargaining chip of any type. Yes, there are many Western companies and funds that rely on Bitcoin, but China is much more likely to target large US tech companies like Apple and Qualcomm, something that they have done. Now, of course, even if the Chinese governments would not want to attack the network, they may indeed still want to control it. Control is a great thing to have, especially for an authoritarian country. We also know that China has recently launched their own blockchain initiatives, including the E1. Of course, these are less about decentralized democratizing tech and more about state control of personal finances. Either way, it shows that China is more interested in blockchain tech than their counterparts in the West. It would be an immense feather in their cap to control the network of the most valuable cryptocurrency in the world. If that prospect is quite alarming to you, then it should be. Let's also not forget the ongoing questions about Huawei. There are concerns that the Chinese government is using the firm to embed themselves in Western telecommunications networks. So yes, if installing your technology into another country's IT networks is a plot of yours, then simply directing Bitcoin miners to do what you want in your own country should be a piece of pie. Okay, I know I've come across as a bit of an alarmist, but these are legitimate questions that need to be asked. According to a recent Genesis mining survey, Chinese centralization has over 60% of respondents concerned. Concerns that should not be swept under the rug, as they constantly have been pre-2020. If there's anything that this year has taught us, it's that nothing is certain. However, there are trends underway that appear to be going in the right direction. Chinese mining companies are also aware of the risks that come from operating in the country, a country where the government changes its mind on blockchain every second month. In fact, despite nearly all mining being concentrated in China, crypto is still weirdly banned in the country. This cannot be the most welcoming environment to want to grow a sustainable business. Indeed, as CoinShare's head of research told Cointelegraph, Chinese miners have never really been completely comfortable with their right of ownership. Now is perhaps also the most taxing time. Moreover, it seems that the Chinese cost edge appears to be waning a bit. There are a number of other countries and regions that offer competitive electricity rates and attractive incentives to set up shop there. For example, countries in Central Asia are offering low power rates, and in Kazakhstan, the government says that they won't tax mining. Perhaps this is the reason for the uptick in mining power in the country. Countries in the West are also starting to look attractive as a place to mine Bitcoin. They also have strong property rights which could appeal to the Chinese mining companies. For example, you have Bitmain that is building the world's largest mining farm in Texas. This could eventually expand to up to 300 megawatts in the future. So, you know what they say, everything is bigger in Texas. And I apologize to any Texans who were offended by my attempt there at your accent. Moreover, this US trend could pick up more steam in the wake of much lower energy prices. In the Middle East, Chinese mining companies have set their sights on Iran. Rock-bottom electricity prices here are a draw for miners from all around the world. They've also been looking at sites in countries further afield, like Canada, where hydro prices are down and the weather is ideal for cooling of mining equipment. So what this all means is that mining power appears to be on a trend away from China and towards mining in more sustainable and secure markets. Indeed, according to Barry Silbert, founder of Grayscale Investments, quote, "What I have seen recently is a real growing shift towards attempts to move a lot of that activity outside of China into specifically the US and Canada." This is a trend that we actually saw from the data that the folks at Cambridge University came up with. As you'll recall, Chinese hash power made up over 73% of the total back in December of 2019. In April, this was already down to 65%. No doubt a large driving force behind this fall was the coronavirus and the impact that this has had on supply chains for new mining chips. You also have rumours out of Sichuan that miners there have been ordered to close down their operations on account of illegal activity taking place in the region. However, something else also happened in May that may have had a teeny tiny impact on the Bitcoin mining market. There is no doubt that the Bitcoin halving has had a pretty large impact on the mining industry. For those miners that were already hashing on the margins, a 50% fall in your revenue may be the death knell to your operations. You can actually see this by observing the massive drop in miner revenue over here. This has resulted in many of them shutting down their mining rigs. Take a look at the fall in the hash rate here. So, it's pretty clear that there is a consolidation going on. Some of these miners may come back once difficulty is fully adjusted, but many will not. Only once more profitable mining chips start hitting the market will we see this hash rate start to pick up again. And once this hash rate does come back, I won't be surprised if the geographic distribution is quite different to what it is right now. It's time to wrap things up here with a few of my personal thoughts on the matter. Now, I think that miner centralization is no doubt a pressing concern that should not be swept under the rug. Satoshi developed Bitcoin for the distinct purposes of distributing control away from large centralized forces. Even though the threat was there over the past few years, those in the community assumed that the Chinese government was entirely rational and that all users' interests were aligned. If there's one thing that the coronavirus has shown us, it is that this is not always the case. There are reasonable risks that exist with having over 50% of the Bitcoin hash rate within reach of the government. A simple decree is all that it takes, and that's it. You now mine for us. Despite all these risks, I still think that the chance of it happening is rather slim. The government there has bigger fish to fry, and they have much more effective tools to combat other nations economically. And, as I pointed out, data seems to suggest that mining farms are looking further afield. They've set their sights on countries with more entrenched property rights. Countries with strong tax incentives and dirt-cheap electricity. This trend has been evident over the past few months, and the halving event is no doubt likely to have accelerated it. It'll be interesting to see what the stats look like once more concrete geographic data is released. So yes, I'm still bullish AF on Bitcoin, and it makes up a considerable portion of my net worth. But it's always important to address concerns and criticisms of your investment positions. Echo chambers help no one. And that's it, people. My take on miner centralization. Now, of course, this is my own analysis. I absolutely need to hear from you. What are your views on the concentration? Are my fears overblown? Please do let me know below. And also, if you found this video helpful, then help a brother out. Please smash out a like and bosh that subscribe button. My next video is just around the corner. I hope you guys enjoyed that video. But honestly, I have so much more that I want to share. Stuff that I couldn't really fit in this video, sadly. This is exactly why I've started a weekly newsletter. It's basically a compilation of all the interesting content that may have flown under your radar. News, reviews, analysis, and hot market tips. Wanna join? Well, don't delay. Just scoot on over to the description where you'll find a link to my sign-up form. There you can enter your email address, hit submit, and hey presto, you are a Coin Bureau insider. My next newsletter is being worked on as we speak, one you won't want to miss. See you next time, chaps.